Hey everyone, this Dividend stock is down 45% off its highs. In this video, I'll share with you what that Dividend stock is, but before I share with you the Dividend stock, I'm going to highlight the characteristics of this business, its profit margin, its cash flow, its dividend yield, and then at the end of the video, I'll reveal what that stock is. So let's get started right away with this stock that's down 45%, and it offers an attractive 2.13% dividend yield. Now, it's not one of the highest dividend yields in the market, I will admit, but for this stock, offering a 2.13% dividend yield is attractive for two reasons. Number one, historically, it's a relatively new dividend paying stock, and number two, there's opportunity for this dividend to grow over the next several years. There's a very high likelihood that this dividend payment will grow over several years. So if you're buying this dividend stock today, earning a 2.13% dividend yield, 5 years from now, it's a very realistic probability that that dividend payment will be much higher than where it is today. Another thing I really like about this company is that it generates very strong cash flow from operations. In its most recent quarter, cash flow from operations were 841 million. And the business model of this dividend stock is very positive for cash flow operation generation. It's an asset light business model, which means it doesn't need to invest in things that are very capital intensive. It doesn't need factories. It doesn't need manufacturing facilities. It doesn't need warehouses. And all of those things can be draining on capital, which is not good if you're looking for dividend payments, right? Because when that company makes profits, it needs to reinvest in those capital intensive areas, which limits the potential for dividend payments. But for this company, it's got a very asset light business model, meaning when profits come in, a greater share of those profits can be allocated towards dividends, which is really good news, which is one of the reasons why I really like this dividend stock here. Another reason I like this stock is because of its very healthy operating profit margin. And if you look at the last 10 years in the trailing 12-month periods, this dividend stock has maintained an operating profit margin above 20%. At times, it has risen over 30%. Now, for any company, an operating profit margin in the double digits is good, right? When you start going into the 20, 30, and some incredible companies are in the 40, 50, 60% range, now you're getting at very excellent, incredible, rarefied territory when you're going that high. But when a company's generating operating profit margins in the 20 percentile, it's solid to be sure. And this company certainly has that. And finally, one of my favorite things about this company, about this dividend stock, is that it's relatively cheap. It's not expensive. What I have here is the forward price to earnings ratio, and it's trading at a forward price to earnings of just 9.58. Now, if you compare that to the average stock in the S&P 500, the forward PE ratio is between 17 and 20. This stock is less than half of that, so it's less than half of the average PE ratio, and it's expected to grow over the next 5 to 7 years. I think it's expected to grow over that time. And so you're getting a company that's got earnings growth potential, trading at a relatively inexpensive valuation. And if you go back to January 2022, this is about as cheap as this stock has been. So you haven't been able to buy this stock this cheap for over a year and a half. So now it's come time to reveal what this stock is, and you've been waiting for it, so here it is. eBay. This dividend stock is eBay. eBay is down 45%, offers a dividend yield of over 2%, with operating profit margins over 20%, trading at a forward price to earnings ratio of less than 10. For all those reasons, I think this dividend stock is one down 45% that you might regret not buying on the dip here. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.